Hi, it's Vi. Well, there is a lot going on this week in the news and the markets. I'm recording this on Thursday, March 5th, which is less than a week since the strikes on Iran started. And it's not at all surprising to see that there's extra volatility in all areas of the market in this early stage of a conflict, and especially one that we really don't know the clear end game. So markets are currently taking risk off the table and oil prices are moving upward. But there's also been surprising volatility in gold, silver, bonds, and a strengthening of the US dollar. I won't go into all the details of why or how some of this is happening, but what I want to say is that at times like this, it's natural if you feel uneasy. The headlines are dramatic, the markets are reacting very quickly, and uncertainty can even make seasoned investors feel uncomfortable. And here's what I want to emphasize. The market volatility is normal during a geopolitical crisis, and we're seeing a familiar pattern, a sharp downward reaction, a rise in the volatility, and then some resetting as investors attempt to price in economic impact at home. How these hostilities may impact the broader economy is unknown right now, but it will likely play a bigger role for investors over the medium term. Most importantly, you want to know how this volatility impacts your investments and financial planning. When we design portfolios, we design them with the understanding that there will be unforeseen events, including geopolitical tensions, economic shifts, policy changes, that we can't foresee ahead of time. We just know that there will be, at some point, volatility. So we're getting that right now. But we have incorporated diversification, risk management, and a long-term strategy to help reduce risk over the periods of time and weather these periods of turbulence. Now, if you think back to the last time we met with you, you'll recall that we discussed what your financial needs are coming up over the next couple of years so that we can be prepared and not have to change investment strategy during a turbulent period like this. It's times like this that do tempt investors to make quick, emotion-driven moves. But historically, when you react to headlines, it's often led to a long-term worse outcome than if you just stick with the plan. So over time, the markets have absorbed wars, recessions, pandemics, political crises, and unexpected global shocks. And the long-term investors have historically been rewarded for their patience. That said, we are continuously monitoring the situation, the market's response, and any potential implications for your portfolio. If market conditions shift away and that warrants action, we will communicate with you proactively. Events unfolding in the Middle East are serious, and markets may remain volatile in the coming days and weeks, but volatility alone is not a reason to abandon a well-constructed financial plan. As always, we encourage you to reach out to us if you have questions, concerns, or simply want to talk through what this means for your personal financial goals. We're here to provide clarity, perspective, and guidance, especially when the news feels overwhelming. We'll get through times like this by staying disciplined, thoughtful, and focused on what we can control. And we thank you for your ongoing trust. Take care.